Okay, so in this webinar, what I'm going to be talking about is some of the things that can help you to become consistent in your trading, but at the same time, what are the shortcut steps that can you take to make sure when you're looking at the charts, what is it that can be done soon? And what are the things that you can avoid? You've probably heard many, many times people say, you have to not trade every single day and you have to learn when not to trade. These are very important pieces, but to know to do that requires a little bit of understanding. And I want to make sure today we get you that understanding so that way you start off 2025 with a bang. Let's get straight into the charts. Now, when looking at a chart, the first thing that's going to come to many people's mind is, okay, well, which pair do I need to pick? Which time frame do I need to pick? Okay? So it's like this. It's if you're learning, you're in this industry to make money, right? So that's a given. That's a given. You're in this industry to make money. Many of you guys are looking to get into this industry for the very first time. But to enter this industry, what you know so far is looks like this industry makes some money and it will give me the freedom I need to work from wherever I choose and please so I can be similar to what I see on YouTube and Instagram where people are just living their life, going around places. It's true to a certain extent. It doesn't mean it's all false. A lot of it is fluff out there, but it doesn't mean it cannot happen. It does happen. And what I'm going to explain to you is how do you get to that stage where you can identify what should I trade and how does this industry allow me to make money from it? Because if I click a buy or sell button and then I'm supposed to get paid for that, isn't everybody else doing the same thing? Is the strategy I'm learning on YouTube, isn't that the same everybody else is learning? Especially if it's a super popular video and everybody's watching that. So then how can this be a 95-5 game where 95% of the people lose money and 5% make money if all the information's out there for everyone to consume? It's because the information out there for everyone to consume is the same type of information like going into a university and just going through that rat race over and over again. It's trained to make you think in a very particular way. And if you go down that road, you're going to feel intelligent. You're going to feel smart. You're going to look down on people who don't know what you do know. But the end result is what's in the bank? Nothing. Right? If you look at a lot of the people who are graduating out of universities, you ask them that same question, what's in the bank? Nothing. Okay. But they feel intelligent. So what we want to do is we want to pull away from feeling intelligent and taking action. Okay. We want to move away from doing that. And that's one of the things we want to talk about here. If you want that shortcut, we need to jump over a lot of these hurdles, right? Okay. So let's aim at some of these key points of, well, how do I know which one to trade, especially if you're in FX, and how do I know what time frame to do, and should I be trading today or tomorrow? How do I know what to do? And then I can get into a little bit of details. Okay. Now, well, when it comes to the markets here, when it comes to the markets, one thing I want you to understand is think of trading like deal flow. Okay, there's a deal coming your way. So when you wake up in the morning and you particularly really well about PlayStations, for example. Let's say you're a gamer, okay, and your gaming device, known as PlayStation, you know that's really, really well, and you know what it's worth. It's worth $500, $600. And if you find it for $400, you're like, that's a deal. I know it's a deal because I know that industry, right? I come from that. So how do we prepare ourselves to know before we go out there looking for deals? So what's essentially happening is looking for deals is basically saying, where am I going to find my deal in these options that are available out there? So if I come to you and I tell you, you have to be a Euro USD trader. Every day you must trade Euro USD. London session, New York session, Asian session. That's not a career you can survive with because not all the time is there a deal, right? Just like when you buy normal things, you're never going to get a 90% or 50% discount on every single item that you like for every day of your life. It doesn't work like that. Markets are no different because what is a market? It is the same thing you do in real life. Don't forget that. Don't forget that. So so coming into the market, we want to make sure when we wake up or you're coming home from the office and you sit down on your computer, you're looking for a deal. If the deal is not there, walk away. Walk away. So far, so good? Okay, good. Now, the next thing to do is to understand when you're dealing with your chart and a computer, a deal works on what? It works on price. Remember that PlayStation we just talked about? It was $400, but it's supposed to be $600 or $700, something like that. But you're getting it for $400. So it has to do everything with what's the price? What's the price? So whether that deal you get today, 3 hours from now, 15 minutes ago, doesn't matter. So one thing I want to remove from your mind is this thing up here, it's just a way to look at the deal. It doesn't mean by changing the timeframes a deal will exist. It doesn't happen like that. So far, so good? So if Microsoft is trading at all-time highs, right? All-time highs, it's not a deal, right? But if I go in down to the 5-minute chart and I see something coming down like this, is that a deal? It's not. It's a deal for that millisecond. It's a deal there. But for you to make any money, wherever you buy from, it needs to go higher. And that's what we want to solve. If you buy, how do you know will it go higher without trying to memorize a 500-page report on step 1, do this, step 2, do this, step 3, do this. And if you do everything as perfectly as it can be and you make a mistake, it's your psychology. Come on, come on, come on. After the third time hearing that, you should start to be a little bit like, yeah, right. Like, come on, I've been working really hard at this. And then you're just at the end going to say it's psychology. What's the point? It's because psychology can't be measured. If it can't be measured, then how do you win? You can't win. You're stuck in a rat race forever. So you need to understand, how do you make this deal process a little bit more objectified, a little bit more quantifiable. Okay. So we want to make sure we do things correctly as you start 2025. Yeah. Want to do it right. Okay. So let's start to take a look at something like this. Now, if I open this chart right here, and let's say you wake up in the morning, you're stretching, you're like, let's see what's in the market today, bro. Okay. And then you sit down on your computer and you're looking at your charts and you're like, I just happened to click on whatever this pair is in front of me. And what do I see? I see my price is right here. I see resistance right here. This is the top. Prices went down from there. I see a support here. I'm going to draw a line like that. Okay, all of these are good observations that you can do. But what are you trying to do? Well, if there's a resistance here, and if I draw a Fibonacci here, and the Fibonacci retracement says this is a 60 or 70% retracement, therefore it must sell. Okay. Okay, good. You're putting some analysis onto it from whatever you tried to learn. Correct. Okay. How do you know if it's going to work, though? You see, this is what you need to solve to say, how do I know it's going to work? I got the rules. Someone gave me the rules. I try to copy it. But how do I know it's going to work? If I don't know if it's going to work, then will I have the confidence to say, should I trade this with $100, $1,000, $10,000, $40,000, a million? How do you ever get the confidence to trade bigger if you yourself don't know in your soul it's going to sell? Right? But let me ask you this. What if I teach you how to do that and you know inside that thing's going to go down? This changes the paradigm a little bit. This changes the way of like, I know it's a deal. We got to get in on this thing. And now we're going to plan through technical analysis on how we get in on it. Okay. So we're going to move away from how do we get in on it all the time, because that's what everybody wants, right? Everybody wants a strategy. Okay. If I take a strategy and let's just give it to you in a simple method, your strategy is to flip houses, right? So someone gives you a strategy and they say, "Hey man, you want to make a lot of money? I'm gonna show you how to make a lot of money. You're gonna take a house, you're gonna get a loan, you're gonna buy that house, and you're gonna sign the paperwork exactly this way. And once you sign the paperwork exactly that way, you're gonna go to your nearest Home Depot, you're gonna buy some tools, you're gonna change the flooring of the house, you're gonna flip it, and you're gonna sell it, and you're gonna make a profit." And that's how I've been doing it for the last 10 years. And now I've told you my strategy. Now you do it. Now you take this strategy and you go out in the outskirts of Mongolia. You're doing the strategy as perfectly as you learned it, but that's not where the deal is. That's not where the demand is. You see what I mean? So it's not what you're learning that's the problem. It's where you're trying to apply it. That's objective number one. You got to learn that part first. You got to get that part in your head of, okay, what am I going to do with this strategy and where should I apply it? Okay. Because just by looking at a pattern, by seeing a sign for a house for sale, it doesn't mean I should do it. It probably has cockroaches inside and rats running around everywhere. I don't know if I should flip that house. I'm just using an example of flipping houses because everybody knows real estate, right? Or everybody knows of real estate. Or someone in your lifetime has probably screamed in your ear, buy property, buy property, buy property. So everybody has some kind of knowledge with real estate. That's why I'm talking about it. Okay, let's go back to the charts, yeah? So far, so good? Making sense? Okay, we're going to move back to the charts here. And we're going to say, what do we need to do first? Couple of things you need to do first. Now, some of you guys have the app called Market Beats. Okay, I'm just going to move this screen upwards here so you guys can see it. There's an app called Market Beat. Some of you guys have this, some of you guys don't have this. It's available on the Mac OS store. It's also available on your iPhones and Android devices. What this is it monitors the market as a whole. Now, before I explain to you what the app is, I'm just going to show it to you on a chart on how you can manually do it first, okay? Rather than going straight up shortcut. I'm going to show you how to manually do it. Okay. Let me open up. So this pair that we're looking at right now is Euro New Zealand, right? I'm going to open up for you Euro Group. Okay, what that is where is my Euro? Where do you go? Here. Okay, what I've done is I've opened up Euro on my charts here for you guys to see. Okay, now if you look at Euro, we say, hey, this is Euro USD, this is Euro CAD, Euro Swiss franc, Euro Aussie, Euro New Zealand, and Euro Yen. They're all Euro, right? So I want to know what I cannot see in one chart. I want to know for a whole, what's happening to the Euros? What's happening to the Euros? Euros are going down in this one, down-ish in this one, not that much. Sideways in this one, upwards in this one, upwards in that one, sideways to downish in that one. I don't have stability in the Euros. I don't want it. I don't want a deal that doesn't have stability. Okay, notice I'm doing this in this particular case, this is a daily chart. What I'm trying to do here is I'm trying to notice what's the demand. What's the demand of the market? Okay. Now, remember, if you're flipping houses, flip houses for people who want to buy houses, right? That's where you're going to make your money. So if you're about to buy a Euro something that you're going to have to sell later for more expensive, do people want it? If they don't want it, what are you doing buying it? What are you going to do with the Euros? There's no point. Right? So just because we draw a line, the way you might draw a line on your chart will be very different to a way I draw my line on my chart. And it'll be very different to the way everybody's drawing their lines on a chart. So how can you be so certain your line is going to hold and it's going to push prices away. I don't make business decisions in real life by coming to the charts and saying, where's the line? I don't do that. Do you do that? Do you go to the grocery store and saying, I want to buy this banana, but let me go home, turn on my computer and see where's the line? Where's the Fibonacci line? Who does that? Nobody does that. Okay? So don't lean on these things as a holy grail because they're not. They're an assistant to give you a visual representation of if I draw a line like this, yes, it's beautiful. It connects the dots and that gives me nostalgia from preschool. But all it is a visual representation of price getting bought higher and higher and higher. Okay? That's all it's telling me. Does it tell me that I should again buy higher? No. Get that mistake or myth out of your mind. That's not what it's telling you to do. It's telling you so far, this is what it has been doing. That's all. Okay. Now, we're looking for demand. We're looking for demand. All right. We're going to go to New Zealand. That was the other one, right? We were looking at Euro New Zealand. We saw the euros. We're like, Euro, I don't see anything that makes me say, this is cool. Okay, so now I'm going to look at on the same thing on the daily. I'm on the New Zealand's and I see New Zealand USD this way, New Zealand CAD this way, New Zealand Swiss this way, New Zealand Yen this way. Now, in this one, New Zealand's on the right side, which means the chart is flipped upside down. This means the same thing. Upwards means the same thing because all of the charts represent New Zealand is weak. Now, wait a minute. It's not just one chart. It's across the board. New Zealand is getting weak across the board. What does that mean? That means for whatsoever reason, people are dumping the New Zealands. They're dumping it. They're getting rid of it. Ugh, right? They're trying to get rid of it. So all we're thinking about is, can I also help getting rid of it? Can I make some money trying to get rid of it? So if you want to sell something, there must be someone willing to buy from you. Correct? Okay. So you have to get this idea in your mind. So first you want to do is identify the flow to say, where is my service required? Because all our job is we're nothing but an agent. You see those people who are flipping houses? They don't need the house. In fact, the longer they hold on to the house, the more painful it is for them because they got bills to pay. So as a trader, you don't need these trades either. You don't want to hold on to a trade and nurse it every day and saying, oh, nice trade, nice trade. I can't wait to see you grow up in 3 years. Well, what are you doing? That's not how you trade, right? You want to know if I get into this trade, how much until I need to get out of this trade and how soon. The sooner the better, right? Isn't that the intention is you want to flip your money and saying, if I put in $1,000, hopefully I can get 2,000, right? From a $100,000 account, or if I have a $1,000 account, I want to put $10 here to get $20, right? So you want to obviously do your money management. You don't want to jump these chances really quickly. So far, so good. Okay, moving forward even deeper. Now, what are we doing now as the next piece? Where's okay? As the markets keep flowing in a certain way, and you're like, okay, you've come to a conclusion. New Zealand is weak. Now that you know New Zealand is weak, we want to do a couple things. Let me open up this thing here. Okay. Now, when you're dealing with the markets and you've come to a decision that, hey, New Zealand is weak, and you know it's weak, and you know people are trying to get rid of it. Okay, they're trying to remove New Zealand's. Okay, now who is trying to get rid of it? It's not you. It's not your friend Sally. It's not everybody else. People, real serious people who are in the economy, real banks, real hedge funds, people who have a reason to buy factories there in New Zealand. Now they're seeing a risk for whatsoever reason, whether it's politics, economic statements, inflation, unemployment, whatever the reason is, they've decided, I don't like New Zealand anymore. Get rid of it. Okay. If they're saying they want to get rid of it, that means they want to sell. Who wants to sell? Big boys want to sell. It's across the board. That means they're dumping it by the barrels. They're like, I don't want New Zealand. I don't want New Zealand. So your opportunity is okay, I can help in this process, but I don't want to sell here because I needed to go further to make any money. So I need a deal. A deal means I know people want to get rid of it. If I can get some kind of a better rate, let's say the rate is $10 down here, and now people are willing to pay for it for $15. You're like, I know New Zealand is being dumped, and I'm getting it for $15 now a piece. They're willing to pay $15 for it. So you're asking the guy, can I help you? I will help you sell this at $15. I will put up the money for it so we can sell it later and get a profit off of that. If this way it doesn't make sense on the sell side, let me flip it over to the buy side. In the event, okay, because sometimes the sell side gets a little confusing. Okay, in the event New Zealand is strong. Okay, in the event New Zealand is strong, which means it's no longer, ugh, it's more like, gimme, gimme, gimme. I can't wait to get enough of it. So the chart looks like this on all the New Zealand USD, New Zealand CAD, New Zealand Yen, New Zealand Swiss. It's going upwards. And you're like, I don't want to pay that $100 price, whatever that price might be. Remember, price, whatever that price is, not the time frame. So whatever that price is, I can't, because for me to make any money, it's got to go up to 105 or 110. I can't do that because I don't know if it's going to go higher. So all I can do is say, can I get a pullback? Can I get a discount? Now, when the discount comes in, which means anything below the 100 is a deal for you now, right? Your job is to see if I get anything below 100, let's say the price is 90. Is 90 a good deal? It's less than 100. I can make some money there. What if it goes to 80? What if it goes to 70? So now the game for you as a trader is, okay, I don't want to pay 100, but whether it's 90, 80, 70, or 60, whatever the price is, how do I know when to get in? You guys all agree right now? So at least that logic is there in your mind. I don't want to pay 100 at least. So when the markets are flying upwards, one thing you need to walk away from this webinar and know is whatever happens, I'm not paying that price. What do you think? I'm stupid? So every time when you see the price jump and the news event releases and it's flying upwards, don't hit the buy button. Just look in the mirror and be like, what do you think? I'm stupid? I'm not going to buy those prices. Only FOMO people buy those things. I need a deal. I'm a deal maker. I'm a Shark Tank walking alone at my desk. I'm a desk tank. Whatever you want to call it, right? You need a deal. You need a deal. And if the deal's not good enough, you walk away. So now a deal is coming your way. Price is coming back. Price is coming back. Price is coming back. Now you have all kinds of tools in your favor to tell you how do you determine the deal. You can do the deal based on Fibonacci, which is there's a line here, there's a line there, there's a line here, there's a line here. It's got to be one of these lines. Okay, you're no better than the guy who's saying, I don't know what number. Okay, so the guy who's doing Fibonacci and saying, I need some kind of a percentage discount. You're no better than the guy who's saying 90, 80, 70, 60. I don't know. Then there's a guy who says, ooh, you see the support resistance? I'm going to draw this line here. Oh, that's the most beautiful line that I have drawn. It's so good. It's so good. So how do you know it's so good? How do you know? You don't know. All you know, it's below 100. Okay? So now, then there's the other guy. This price should be good because there's a moving average running through this area. That's dynamic support and resistance. That's another tool. Another guy will say, I have a nice trend line going through here. So 60 price should be good because I got a trend line, baby. You see the dots I connected? This dot, that dot, that dot, that dot. Therefore, next dot, right? It's no better than the guy saying 90, 80, 70. What price? All of this comes under one conclusion. It is not whether my hypothesis of what indicator is going to hold oversold, overbought, RSI, MACD, bat pattern, cat pattern, whatever it is. The question is, whatever deal I get, when does the deal end? And when the deal ends, will it resume? That is the number one question of the trader. I know I'm not going to buy up here. I'm not stupid. I know I need a deal. I'm smart enough. But when the deal comes in, when do I get in? That's the game. When do I get in? That's the game. So far, so good. Is it clicking so far with everybody? Okay. So if every day you go to the supermarket and the banana is $5, $5, $5, $5, you can't do business if it's selling for $5. If you know everybody wants the banana and it's selling for $5, $5, $5, you can't do any business because if you buy it for $5, how do you sell it for $5.50? It's too expensive. You can't sell it for $5.50. It's too hard. When you buy up here to sell it even more expensive, that's hard. That's super hard. So if you go into a neighborhood in wherever you might be, let's say Bel Air or something like that, a fancy neighborhood, and houses, the most expensive houses is 100 million, and you're like, ooh, the market is super hot right now. All the prices have flown up. It's now 200 million, and you decide, I'm going to buy it for 200 million because I know I can sell it for 205 million. That's super hard, man. That's super hard. You are pushing your luck to say it should go more. That's not the way to do business. Okay, so you want to flip it around the other way. Okay, you want to flip it around the other way. So let me take you back to the charts. So it's a little bit easier to see, and it's a little bit easier to comprehend also when you're looking at a chart. All right, now, when looking at a chart, let's say you get up to a certain price. Let's say here is your certain price, and then the price just doesn't go any higher from there, right? It starts meandering at whatever this price is. Okay, we'll call it price X. Okay, it's that price. Okay, we don't need to know the price. We just know it's that price. And that price, we want that minus something. -1, -2, -3. We want that minus something to know it's a deal. Now, you can go further by saying, if this has been going up, 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 do I want a 5% discount? Right? If you go to the Rolls-Royce dealership and you're saying how much for this car, and the guy's like 5 million, and you're like, I need a deal. Give me a deal, I'll buy it right now. And he goes, $4,999.99. You're probably gonna slap him, right? You're gonna be like, what kind of deal is that? Keep your damn dollar, right? I don't want it. So you have to understand that even deals, when they're tiny, it's not desired. A deal has to be bigger to be desired. Okay, so there's one thing by saying, I see a pullback, and there's another thing that's saying, do you think all the larger players who really want this, will they want that little bit of a dip? They want a bigger dip. They want a bigger thing so they can say, ah. So the question comes in is, how do you measure? How do you measure when it's going to stop? Now, prices are going up and they start to pull back and they're coming down and they're coming down. The one thing you need to do, okay, I'm going to give you guys all a quiz and I want you to work with me here. Ready? The discounts are coming in hot. Okay, they were at $100 and they dropped $80 in 5 seconds. Okay, Then they hung around $80 and $90 for 3 days. They just hung around there, hung around there. Okay, now close your eyes and listen to what I'm about to say. Listen, don't look at it. If you look at it, it's gonna keep pulling you in. Trade me, desperate, you know. Don't think about it. Just listen to what I'm about to say. It went from 100 to 80 in 5 seconds. It dropped $20. Then it hung around for 3 days. Then it went from 90 to 50 in 5 seconds. Do you think the deal has stopped? Now, that's a big deal. It went from $100 to $50 overall, but it dropped from 90 to 50. I want you to focus on this deal got bigger and better than before. Why? There's something wrong. Why are they getting rid of this? If they're getting rid of this, I need to wait because I might get a better deal out of this thing. I know it's a discount for me. 50 is way better than 100. So if I just buy and close my eyes, I'll probably do well anyways. But as a trader, I can't do that. I can't just buy and saying, let's hope for the best. That's what an investor does. An investor buys and says, I'll hold on. I don't care. But a trader says, if I buy, I need to put a stop loss somewhere because I was trained to do this. And then my stop loss, I don't want it to get hit. Well, if you don't want your stop loss to be hit, you got to time this thing. You can't just buy anywhere. So 50 is already good, right? Now, prices go from 50 slowly to 80. It goes back up to 80 very slowly. Does that tell you the demand that was there before, those guys are back? They're hungry for more, baby. Does that give you that information? All that's going to do is anyone who's looking at this as an SNR is going to start pulling out their hair saying, oh my God, I missed this trade. Oh no. Oh no. That was a 50% retracement, 61.8 beauty. I missed it. Did you miss it? Are the big boys back? This is the big misconception. There's a beautiful trend line going through here. There's an MA going through. Bollinger Bands are boiling, right? RSI is RSIing. MACD is MACDing. Everything is doing what they're supposed to do, but your logic, what you normally do in real life, use that logic. Is the big boy back? All you know so far, the discounts were dropping, and then the discounts dropped faster. And now when the buyers came back, they're like, I don't know, man. I don't know if I want to buy this. You don't want to buy that. After that, what's next? Now you can go back to closing your eyes where I give you the next move now. As it inched its way up to 80, it starts creeping down. 80, it takes 1 day to become 70. It takes 2 days to become 60. And then it takes 5 seconds to go up to 90 again. How do you feel now? Now, the first thing you need to do to get out of your mind is, I knew 50 was the price. That, you gotta kill that desire. You have to kill that desire of, I knew 50 was the price. Never look at that 50 price ever again and regret it. 50 can go to hell, right? Never regret the 50. You don't know at the 50. If you don't know, there's no money. You can only know it's 50 hindsight. Don't do that. 50 does not let you put in massive amounts of lot size when you don't know. You're not going to put huge lot sizes on a hump, on a guess. Don't do that. But as 60 triggers and goes fast to 90, you're like, I think they're back. I think they're back. You're still not adamant yet. You want to do the next phase. Prove it to me. hold it, hold it, hold it, on its way again. I'm coming now. I am now coming. Okay? I am now going to get ready to buy this. This allows you to bypass the nonsense. Now, did you get the 50 price? No. But what you don't have is if you had bought at any random price and the price goes down, you're dead. If you bought at this price at 80 and the price went to 60, you're dead. But if you buy as it's leaving, not flying, as it's preparing, it's showing you the big boys are back and the discounts have ended. What it's doing is from the pendulum, you are choosing, I don't want it, I don't want it, I don't want it, I don't want it, I don't see him, I don't see him, I don't see him, I see him, I see him, I see him. Notice the difference on this side. You're saying, I have my discount. Where are you, big boy? I have my discount. Where are you at? Come on. I got my discount. Where are you at? And all you're doing is waiting for them to return. If they return, you know that the deals and the demand is still on. If it's a 5% discount, you don't want it, they don't want it. It doesn't matter how beautiful the design looks. It doesn't matter if there's an MA running through it, a SNR running through it, a Fibonacci running through it. If it's a 5% discount, nobody wants it. Why do you want it? Let it go. It's not a deal. So if you come in, you're like, morning, bro. Let's see what's on the charts today. And you sit down on your desk and everything is like this, flying, flying, flying. There's nothing you can do. There's no trades today because you have no deal on the table. You don't overpay to over push further to earn a penny out of that thing. You don't want to do that. Is it making sense? Is it slowly going in? So if you want to increase your consistency of how good of a trader you are, you have to get very, very sharp at saying, one, I don't buy high. Two, give me a deal. Otherwise, I don't want it. And when the deal comes in, you're like, where are you, big boy? You got to come back. Otherwise, I'm not touching this thing. Otherwise, let the deal come. Let it come. The deeper the deal comes, hey, the better for me. I, I don't want to pay 100, 50. I'll take it. No problem. 40. Thank you. 30. Thank you very much. No FOMO whatsoever. Because if the big boy doesn't want it, it can go to zero. It can go to zero. I don't want it. If I buy it and nobody else buys it from me, I'm stuck. I don't know why this is very hard for traders to understand. You're stuck if you can't offload it. Okay? So you bought a truck full of CD players and everyone's like, what's a CD player? And you're like, I don't know, but I got it for $1 a piece and I've got 1,000 of them. Yes, that's a deal, but nobody wants it. You're stuck. Good luck. See what I mean? You got to be very careful of that. So, second thing you want to be careful of, if the prices are going in your favor and the deal comes in, deal comes in, deal comes in, don't guess. Don't guess that this is where the big boy will step in. Don't guess. Okay? This is where the big boy will step in because X, Y, Z, whatever label you want to give it. They should come in because Fibonacci. They should come in because support resistance. They should come in because blah, 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 blah. Okay? You don't have to give it any reason. Those reasons are a educated guess. It's not concrete. Wait for the concrete. What's wrong? Okay? This is why 95.5 exists. People can't wait. People can't wait because they're trying to be rich on that one trade immediately. And then if they somehow happen to, by luck, make money, by chance, make money, they're going to do it again. And when they do it again, the lot size goes up. And when the lot size goes up, Next time it doesn't work, and the market says, thank you. I don't mind giving you a little bit of profit today, tomorrow, if you can put your life savings back into the market. That's what the market's going to do to you. And it doesn't care. It doesn't know who you are. You have to understand that. So it's not personal to you from the market. It's just there's a misunderstanding of how you're approaching it because you have the knowledge. You've been shopping at the grocery store, on Amazon, all these places. You know how to shop. It's not like you're shopping for the first time in your life. You know how to shop. Okay? So once you get the idea of all this thing, look at this thing right here. As this market goes up, 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 up. Okay? Now, whether you're looking at this from whatever time frame you're looking at this, from the 4 hour, the 60, the 15, anything, if you start looking at this and saying, well, this chart, whatever this is, and I see it going up, 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 and it pauses and it smashes down as a discount, hey, that's a 50% discount. Should I buy it? I don't know. Is the big boys buying it? If they're not buying it, I don't want it. I really don't want it. Then it goes inching, inching, inching. You know, what's that song? The spider goes up. It's just inching its way up little by little. You know, teeny weeny, incy wincy spider going up. I don't want that. Right? This proves to me I might get a better deal. And here comes the deal. Bam, bam. Now what I'm doing is I'm measuring how big was the deal last time and how fast. I'm going to say here, I'm going to mark this area. I don't care about this junk in the middle. I'm marking this area here because that was the last price seen. You know, when a person goes missing, they don't say, you know, when a person goes missing, they write down last seen location, right? They don't say last seen location at the movie theater, but he took M&Ms before he went to the movie theater. And before he went to the movie theater, he went to the bathroom a few times. Before he went to the bathroom, what are you doing? Last known location, end of story, right? Okay, so last known location is here, which was this price. That's the last known location. Did you get a better deal in terms of price? Price. They tried to give a better deal in terms of price. Distance, this amount, looks very similar, but sometimes there's a buyer who jumped up, not incy wincy spider going up and down the hill or whatever. It flew. We're on alert. We're on alert. Whatever this thing is it back? Is it back? Now, if it's back, we can reverse engineer it in hindsight once the trade is gone and it's flying up and everyone's making money. Then we can put a nice Fibonacci here and say, oh, did you see that 61.8? Oh, you can do all that afterwards. Did you see this SNR from here? Oh, you can do all that afterwards. You can draw your trend lines and say, oh my God, this is orgasmic sensation. All that is afterwards. Logic first. Why should it go up? Number one, logic first. If you're getting in, do you need it yourself? No. Make sure there's a player first before you get in. Make sure there's a big player again getting into the market so you know the demand is back, baby. Let me get ready also. I can help you load up on these prices. I know you want it, and then I can sell it to you when it gets more expensive. So far, so good? Is this logic making sense? And I try to do it on a chart-based format, trying to explain to you guys what's going on. You guys want me to tell you guys what we're looking at in the office? So one of the things we're looking at right now heavily is New Zealand Swiss franc. This is a pair our office is looking at to see where can we do some sells from. Now, just by talking about this, before I even go into any explanations and stuff, let me take this up to a higher time frame. Now, Some people might say, is this a downtrend, Navin? Is this an uptrend? Is this a range? What are we looking at? How do we know it's a deal? Well, you don't have to look at this. Remember, we did the New Zealand stuff together. We know it's weak. We know it's weak. So we don't need to do all this mumbo jumbo, try to be so precise where we say, you see this trend line? That trend line broke, bruh. The trend line broke. And when the trend line broke, you don't buy the trend line break. You buy the test of the trend line break. How's that working out? It's not working out, right? It's because you're not supposed to do that. It's a strategy that you can use once the logic is set. Okay, once the logic is set, you do what you want. You use Mentor X from YouTube, Mentor Y from YouTube. You use any of their technical strategies that they've given you a nice PDF to download, a 4-point checklist, a 2-point winning strategy. Whatever that is, you can use that in the right logic. It'll work. In the wrong logic, it'll never work. It'll never work. Okay? So you have to understand this thing. Technical analysis is something even you can create. You can say when there is a price here and then the price doesn't come up for half a year and there's 4 moon cycles that pass through full moon cycles and that happens and you don't see any UFOs in the sky, you can sell. That's a strategy. You can call it a strategy and people will listen and follow. It doesn't mean it should be done. You can make strategies all day, every day. You need to know in your soul, why should it go? If I get into the trade, why should this work? Why should this work? Am I just winging it because someone else is winging it? I saw him in his Ferrari, so he must know what he's doing, right? But he's in his Ferrari all the damn time, making videos, editing videos. When does he trade? Like, how is this possible? Right? Okay, so you got to find deals. Finding deals takes a little bit of time sometimes. So we know New Zealand is weak across the board, right? Now, all the stuff that we did, it's already on the Market Beats app. It's just that additional tool. It'll do it for you in case you don't want to do it manually like I just showed you. It'll do it for you. It'll give you some guidance and it'll pop up. There'll be on the phone. It looks nice. It got little bears falling out of the skies and stuff like that. So it'll give you all of that stuff and it'll tell you it's hot. And when it tells you it's hot, then you can start to look at it and say, okay, I see this is the situation. It's going down, 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 down from, I don't know, whatever this day is to whatever this day is. I can see the flow of price. The price goes down. Price is going down. Price is going down. So if someone tells me, hey, Navin, but isn't 2025 a uptrend? Yeah, it is. It's an uptrend. On 2025, yes, but it's going down. It's going down. So I want to know is when does my big boy come back? That's my question. When is my big boy back? Once this thing crashes, then I'll leave the door open for everyone to draw whatever Fibonacci they want out of this thing. Maybe they don't draw it from there. They say, no, that's not how you draw Fibonacci. You have to draw it from here to here. No, that's not how you draw. No, wait, sorry. 1 second. You draw it from this high to this low. No, not the tails. You just take the body. No, not the body. You take the tail and the body and the soul, and you draw it from soul to soul. Why do you want so much confusion when you know, I know this thing's to drop. I just need to work out how am I going to get in. So whether it's 50% discount or 52%, who cares? All you need to know is I need to sell. You got to know that first. Then the next thing you need to know is deals coming in. How's the deal? All of you guys, tell me this. How's this deal? Is it slow or is it hot? Is it hot? Or is it slow? Incy, wincy, spider, go. How is it? It's hot. Don't bloody sell it. Don't sell it. They're giving you a discount. Don't sell it just yet. This is a perfect SNR. Don't sell it. This is a perfect 50% retracement. Don't sell it. This is what keeps you alive in this game, is by being picky. Then the market goes up full speed. Da-da-da-da-da. We got some seller, and what happens to him? Da-da-da-da. Where'd my seller go? And then we got some seller. Da-da-da-da-da. Maybe it's 70% retracement. 61.87654. Maybe it's pi, apple pie. Well, why are we guessing? Why do we need to keep labeling things? Because it makes us feel safe. But to be honest, is that what you want to do in your career? Is keep going into things that make you feel safe? Don't you want to learn it the right way once and for all and just sort of say, I got it. I was just wasting time doing useless stuff trying to find the perfect holy grail when it was staring me right in the face. It's the same thing I do every day when I go out shopping. And I just never thought to connect the two. I thought the market is clicking and a drawing button stuff. But when in actuality, it's a game of how much are you going to sell it for? And how much am I willing to pay for it? That's all that it was. That's all it ever was. And that's all it ever will be. That's what a market is. It's a handshake between the guy who wants to sell and the guy who wants to buy. You just need to understand, okay, how are they doing business? So, little quick experiment for you guys, okay? Okay. I'm going to give you guys a little experiment. This is going to help you here. I want you to understand the speed, okay? And I want you to start telling me at what point do you feel the negotiation is going to come to an end? Okay, ready? Okay. This is you. And this is bruh. Okay? There's you and there's bruh. You say, I want to buy a lot. Okay? Bruh says no. And you say, come on, man, I'll give you 2 times more than your asking price. 2 times more than the asking price. Is the buyer serious? What do you think? Is he serious? Does he really want it? Bruh says, no, I don't want to give it to you. Come on, man, I'll give you 6 times. How desperate do you think the buyer is? Is he desperate? Yeah, he is desperate. Okay, so understand how quickly the guy jumped from 2 times to 6 times. 2 times to 6 times. He jumped really quickly. Then the bruh says, I have a lot also, but I know you can give me better. Can you give me more? Then the guy says, I'll give you 6.5 times. He says, I'll sell a little bit. He says, 6.6 times? Sell a bit more. 6.5 again. Sell a bit more. And then suddenly you say, you know what? I'll give you 4 times. I don't want it anymore. What do you think bro is going to do? Bro is going to have to forcefully drop his price to match that handshake. Because the demand wavered off. It tapered off. On a chart, it looks like this. 2 times, 6 times, 6.5, 6.6, 6.5, 4 times. Notice how it looks on a chart when I draw it out like that. Now, we want to see what happens when you see a discount like that. You buy more. You buy, that's a better deal than before. You buy more. And the bra is like, I have more than you need, actually. Do you still want it? Not for that price. Bra gives you a bigger discount. faster than ever before. You're like, you know what? One time. Oh, come on, you got to give me something. 0.7 times. I know you can give me more discount because I know you have a lot and I don't need that much. I'm not that desperate anymore. Oh, come on, you're killing me, bro. You're killing me. That's how a chart is developed, is between these two parties doing that negotiation. When you think about this, it's this area where the handshake starts to happen. It's that spot when both of them are fighting until they come to a consensus of something that they can both kind of accept. This is where we start getting interested and saying, the deal is about to happen. I want to know what happens next. That's what I'm interested in. I'm not interested in, oh, this was the best price. I missed the best price. That's how a trader, a normal trader thinks, because they want the price. They're not thinking about, is the deal over? Is the deal about to finish? So here, the discount was coming in. Okay, you want to sell now. Okay, you want to sell. You seller, you want to sell that thing. Sell, 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 sell. And then the buyer is giving you, oh, I want to buy a lot. If he wants to buy a lot, are you going to give a discount? No way. You're the store. Someone wants to buy. Let him. He wants to give you more money. Let him. What's the problem? Okay. You sell a little bit. And then he still buys a lot more and he offers you more. You're like, well, then if that's the case, I'm giving you less discount. And then he still buys more. Less discount. He still buys more. What kind of buyer is this? Okay. I don't got to keep giving a discount if he's willing to buy. I don't need to do any technical analysis here. I'm just feeling out. The guy still buys. Okay, let him buy. What's the problem? Let him. But he broke the 50% return. Ah, shut up. Don't give me that nonsense. I don't care. Let him buy. What's the problem? Yeah, but this SNR, I'll strangle you. It's like, shut up. Let him buy. Okay, price goes higher. And then the discounts drop. Some deal happens. The discount drops. Deal, 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 deal. They found a price that they both say, let's do business. I know you want it and I know you want to sell it. How did they know I know you want to sell it? Because they felt it on that hard drop. They felt it. They're like, I'm not giving you more price. I know you can give me a deal. Now the deal is taking place. Once that deal is starting to take place, we become alert as traders because we are sitting out here with binoculars and we're watching this thing and you're like, what the F is going on? Their buyer's lost his mind. He keeps buying and the seller's not coming back in. But I know the seller has a lot of demand. Where is the damn seller? And then he finally shows up. Deal, 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 deal. And my stupid buyer again. But once he came up this time, how's the drop? And then he came up less this time. How's the drop? So I want you to start looking at this from your lens of logic of how do you feel a transaction is taking place? And then you can do whatever you want afterwards. If this thing continues to drop, you can say, you see this SNR here? It broke. And then some people say, yeah, but didn't the SNR break here? Or didn't the SNR break here? Yeah, but I wasn't sure. You didn't know. So what does it matter if it goes through the SNR by half a pip? Who cares? You got to wait. You got to wait till the story's unfolded for you so you can make an informed decision. All you need to know is it going down? Market beats was ringing. You can look at all the New Zealands and they're all weak. You know. So if you know, all you got to do is wait. Give me a deal. Give me a deal. Give me a deal. Give me a deal. Come on, where are you? Where are you? It's like playing hide and seek. Ready or not, here I come, right? So once the player shows up, and then you participate, right? Does that make sense? So you don't guess just because prices have reached Fibonacci mathematical sequence, and you're eating pasta and you're like, oh, Fibonacci must be good, right? Not like that. No four moon cycle stuff, right? Don't do that. Don't do that. Okay, so 2025, you gotta promise me you're gonna walk away from ridiculous nonsense of just memorizing a certain pattern. Because it's not a pattern game. You know it. I just talked about it for an hour trying to get it to you guys. This was very heavily theory based. I want you to go into some of the previous webinars that we've done all throughout 2024 and try to see if it makes sense through the logic lens of things when you look at it. Then I want you to take that information. Don't be intellectual. Be smart. Take that information and go and put action around it. Start with demo. Try it. Okay? Because this is nothing without the action. You got to put them both together. Only then should you subscribe to our YouTube channel. Should you give likes? Because I want you to do it based on performance. Don't do it because someone said so. Don't do it because everybody in this chat room has been with us for over 5 years. You need to know how to do it. You need to understand how it's done. And you need to cross that line that you cannot break for years and years and years. You got to get onto the other side once and for all and let 2025 be that year. I hope you guys liked everything that we did. Thank you all for attending. Until we meet again next time. Okay, those of you guys who are asking about the market beats, the link is in the chat. It's urbanforex.com/market beats. One word. Yeah? All right. Thanks a lot, guys. Speak soon. Cheers. Bye for now.